how you can determine market direction in Bookmap in real time. In Bookmap you have the book imbalance or limit order book imbalance. By the way, if you are using the limit order book in Bookmap, you will have the access to quotes delta. I will come in a few seconds to that, or a few minutes to that, to show you what quotes delta mean and how you can read that. But these two information are, yes, sometimes sufficient to understand where the pressure is coming from. Is it the pressure to the upside or is the pressure to the downside? TTW-MarketVolumePro, which measures additionally the pressure on bid and ask volume. It shows you the bid-ask imbalances, the divergences or deltas. It measures the market volume velocity. It shows you the market direction, and it alerts you when volume spikes happens or when volume spikes occurs. I think it is important to talk about naming color conventions in Bookmap briefly to understand better the demo. So limit bid or resting order bid, this is this side here. Limit bid and the color is green. So when we look at the left side of the order book, we have a bid column, limit orders or resting orders on bid, and the color is green. When we are talking about the limit ask or resting order on ask or offer, then we have the color convention is red here. Aggressors or market orders are always in the mid of this limit order book. That means now it's opposite. When the aggressors are hitting the bids, the color is red, and the aggressors hitting the offer or the ask, the color is green. So when we are talking about hit the bid, what is quite common in the trading industry or trading arena, then it means the aggressors are hitting the bids. They are selling to the buyers. They are selling to the buyers here. Then the aggressor, market aggressor color is red on this side. And when we are talking about lift the offer, that means the buyers are coming in and buys everything from the sellers here on the ask side. Then we are saying, okay, the market is lift the offer. The market is lifting the ask or offer side. You can use ask if you're used to it. You can also say offer. That means lift the offer means the price is likely to going up, and hitting the bids, if there are no bidders on this side, means the price is likely to going down. So that's what's quite important to keep in mind when we are talking about how to determine market direction. Let's talk a little bit about the limit order book imbalance on ask. We have this nice graphical presentation of the limit order book in Bookmap, which can be utilized to understand where the market is heading. If the bar is showing, for example, 66 or minus 66%, so the red bar, as it's nearly covering all the left, all this place here on the left side, that means we have a strong imbalance on the ask side. We have a strong imbalance on the offer side. That means this is pressure to the upside. It indicates pressure to the upside. And not to confuse you, but maybe to talk about the meanings. In case of strong buying, sellers are offering more on the limit ask side here. So this means there is a strong imbalance, or there is an imbalance on the book side, on the ask side. That means the market, you will, if you have this plugin or this add-on in your Bookmap activated, then have a look at that one. It's a little bit harder to watch it now. You will more than once see the extremes now in this high volatile and thin markets. So you will see this red bar, for example, is going to 100%, as well as the green bar to the 100% on that side. Keep in mind that this limit order book imbalance on ask means, okay, there's pressure on the offer side, there's pressure on the ask side. This is a kind of oversupply, and that leads to the ask imbalance in the order book. The opposite of the limit order book imbalance on the ask side is limit order book imbalance on the bid side. That means if you see a strong green bar pointing to the right side of this graphical presentation of this graph here, then you will see and you will experience that there is a strong imbalance on bid, and that means pressure to the downside. The price is falling. The aggressors are hitting the bids. The aggressors are hitting the bids. The aggressors are hitting the bids. In case, and the meaning is the opposite of what I mentioned before on the ask side. In case of strong selling, buyers are offering more on the limit side. That leads to this limit order book imbalance. And this oversupply leads to bid imbalance in the order book. It's quite interesting to keep that in mind, because in normal times, so a few 2 weeks ago, maybe 3 weeks ago, we could really relax and see how the limit order book indicator shows us the direction of the market, more than not. Now it is a little bit more complicated, because this extreme volatile and this thin market, it's really hard to follow this indication here, or this indicator here. So we need a little bit more help from the order book. And that means what I'm teaching and telling the people, if they are known and if they are using the limit order book, there are several other possibilities. For example, to read the order book in the right manner. That means you have not only the limit side, you have not only the aggressors here, the market volume, but you have only additionally so-called quotes delta. It is really helpful because it is a numerical indication of added or subtracted orders. That's not very, very complicated. It's not a rocket science here. The information is there. If you have Bookmap, then I would like to suggest to use it, because it's simply there together with a Bookmap imbalance indicator. You can use the quote delta to understand in good liquid market. So I'm talking about ES, I'm talking about treasuries, soybeans, whatever has more than 100 and 200 contracts on the price level. That means this is a good liquid market. It takes simply time to press the market up or to press the market down. And this time, at certain levels, you will see that this quotes delta gives you valuable and really good information what the market intends to do. So if you are reading plus numbers or positive numbers, you have a pressure. You have the pressure, in this case, the pressure is on the ask side, and you see there's not enough buying pressure, let me say that way, to support the bid side in order that the price comes to a stop. Negative numbers means less pressure or canceling orders. That happens also all the way. It indicates also, and that's a part of my seminar, that indicates reversals at top and bottoms. You can see that how the market is pressing up, for example, if we are reaching a top, for example, and they are resisting on this side. So now what we have, what I want to say, it is extremely, really, believe me, extremely meaningful in good liquid markets. It's hard to read in extremely thin markets like these days in ES or CL or gold and Q, whatever you want to use. It's not so helpful, to be very open, and you will see that, but it doesn't matter. It's still here, and I think you should use it. To completely understand market price moves, we must distinguish between limit or resting orders and market or aggressor orders. Because we are talking about a dual auction, we must consider both sides of the book. Limit orders are sitting for a certain time on the limit bid or limit ask side until they are traded. In Bookmap, they are marked as liquidity. Market orders or aggressor orders are plotted as dots of different sizes, which represents traded volume between limit and market orders. To get a complete picture of the traded limit orders and the aggressor volume, we have introduced TTW-MarketVolumePro. TTW-MarketVolumePro plots the interaction of market orders with the limit orders. Now we are starting to get a most complete picture of market transactions and price movements possible. With the help of TTW-MarketVolumePro, you will understand better where to enter and exit a trade and why. It indicates bid-ask imbalance, divergences, market direction, market order velocity, and volume spikes. Let's start with bid and ask imbalance. To avoid confusion, I am calling it hit bid and lift ask imbalance. That follows the strict logic of the limit order book and its usage. Hit bid means that sellers are hitting the limit bids. Lift ask means that buyers are buying from sellers. Hit bid and lift ask imbalance shows the difference between traded market or aggressive volume on limit bid or limit ask side. As you can see on this picture, the difference between bid and ask means that transactions on one side of the book are stronger in comparison to the opposite side. That means market is out of balance. You can also see it visually in the Widgets section of Bookmap. That means imbalanced market must rebalance. It must find its equilibrium. For the purpose of trading, it means very often this imbalance leads to a break, to a pause in trading. So that means if you see that and if you observe this behavior of your traded market, then tighten or trail your stops or even take your profits. The strong imbalance between bid and ask leads to a break in the market, more than often leads to a break or pause. You can read it also in the widget section and hit bid and lift ask, as well as you can follow the numerical expression of the bid-ask imbalance. This numerical expression does not represent traded contracts. It's the numerical representation of these graphs. The most known usage of TTW-MarketVolumePro is divergence or volume delta. I think every trader knows what divergences are. In our case, in the case of TTW-MarketVolumePro, divergence means bid minus ask, also called volume delta or V delta. The interpretation is quite easy. V delta shows imbalance between market bid and ask at market double top or triple tops or double or triple bottoms. V delta is declining at tops when buy volume decline and sellers start to dominate, and V delta is rising at bottoms when sell volume decline and buyers start to dominate, as you can see on this picture here. At top, declining V delta between two double tops means sell. At bottom, rising V delta between two double bottoms means buy. From my point of view and my experience, trading divergences is not profitable without additional market information. TTW-MarketVolumePro market direction is one of the most interesting parts of the TTW-MarketPro indicator. It indicates very clear who is in control, buyers or sellers. That leads to interesting opportunities. The interpretation is obvious. Red graph indicates aggressors are selling into bids. That means they are hitting the bids. V delta numbers are negative. That means below zero. Green graph indicates aggressors are buying from ask. That means they are lifting the offer. And in this case, V delta numbers are positive. That means above zero. If you want to use the market direction for trading, then the red line over green line indicates a possible sell, and the green line over red line indicates a possible buy, as you can see on this screenshot right there. Market order velocity indicates the speed of market orders as they appear. A steep slope means accelerated buy or sell market orders appears in the market. And a flat slope means decelerated buy or sell market orders appears in the market. Market order velocity indicates aggressors' participation in the market. It gives us information when we are in trades or when we are trading that a steep slope and rising or falling prices indicates a strong market order condition. And the negative slope but rising prices equals divergences. TTW-MarketVolumePro indicates market volume spikes. Market volume spikes happens all day long in every traded market, in every liquid traded market. Market volume spikes are a fast 90-degree move up or down in a very short time. Volume spikes are triggered by, for example, exogenous events, news, and the volume spike tends to end a price move. For trading, it means very clearly tighten your stop or exit a trade when volume spikes happen. The volume spikes are indicated very clear in the Market Volume Pro indicator by this 90-degree move up or move down. Before presenting an example how TTW Market Volume Pro can help you to stay on the right side of the market, it is important to know that TTW Market Volume Pro is available on Bookmap's marketplace. That means secured licensing and payment, which includes a 7-day trial. TT Market Volume Pro comes as a lifetime license, including updates. It runs on Bookmap for Mac, Bookmap for Windows, and in future Bookmap for Linux. It works for data feeds like Rhythmic CQG IQ feed. The X feed data feed support will be added soon. Please see all detailed and further information about TTW Market Volume Pro on my website ttwtrader.com. All these links you can find below the video. Installation is easy. I will spend few words though on the installation of our indicator. After licensing, you will receive your own jar file licensed to your Bookmap copy. Copy the jar file in a directory of your choice. It is called TTW-BA imbalance jar. Open Bookmap, go to Settings, and select API Plugins Configuration. Click on Add and go to your folder where you have stored your licensed jar file. Click on it. Select the included TTW Market Volume Pro. Click on it and load it. Now it's installed. You have only to activate it, and that's it. Close the API Plugins window. Please remember, in order to get it run the first time in Bookmap, Bookmap requires a restart to connect to the licensing server with a plugin. When you have restarted Bookmap, the TTW Market Volume Pro indicator will be available from the time on when you start Bookmap the first time. In the widget section, you can select how your widgets should look like, as circles, as V-bars, horizontal bars, or text. I prefer V-bars or horizontal bars. That's it. Let me show you in a few minutes how you can read the market, how you can read a limit order book, and how the TTW Market Volume Pro can help you to understand the direction of the market and whether you are on the right side of the market, when to trade, where to trade, for example. It is an additional helper for you and for your through your trading day. It works on every liquid instrument. I have chosen the example ESH0. It is from February it works on every single liquid instrument you are maybe trading. It works on treasuries, it works on oil, it works on gold, and yes, and Q and YM. Even in this very, very high volatile trading days and weeks. So let's start with the example. Now the market is open. And let's go a little bit slower through this opening here. Right now at the opening, or just from the opening now, you see which side is leading. It's a little bit too fast now for you, but anyway, you will, if you have the chance or you are interested in this Market Volume Pro, you will see every day that that one side is leading. That means they are hitting, the aggressors are hitting the bids, they are hitting the bids, they are hitting the bids. Mind please, these numbers here, they are 5,500 on the aggressor side, on the bid side, and there are only 5,100, 5,200 on the ask side. You will see these differences along the day, along the trading day. That's one indication you can see from the beginning on when the market starts. So you have, it's still red, it's still red. It's hard to stop, but you see it also when you look at the limit order book here. When you look at the limit order book, the green side is still, it's a little bit more to the right side. It means they are adding to the bid side for various reasons, but the imbalance is very clear on the bid side. And what you can see in the quotes delta at that point of time here is you see that they are adding to the ask, they are adding to the ask, they are adding to the ask. That means it's a kind of resistance. They are building kind of resistance, because that could be also iceberg orders or orders from behind. You know what we see here in the limit order book for every instrument. That means if you are trading stocks or if you are trading futures, this is only the tip of an iceberg. We haven't talked about options trader. We haven't talked about hedge funds who are really in charge of moving a market. And but what we as a retail trader can see and use this free information here is to understand that this that the ask side on the limit side is being added, or is adding. That could be a nice indication that they are resisting. They are showing resistance at those levels here. Let me go forward a little bit. I will make it a little bit faster here. But it's easy to spot now very clearly that red is leading. That means they are hitting the bid, they are hitting the bid, they are hitting the bid. You see also the numerical differences here, 6,600 versus 6,100. So you have different indications that if you are looking for shorts here, if you are short, given you are short here, you sold the S, then it gives you the confidence that you are on the right side on the market. So let's go forward. This was the open. We see there is still selling pressure in the market. There is still selling pressure in the market. With the declining lines here, it means that the relative numbers here, the numbers before, are coming to a break, or it's slowing down a little bit. Now they're changing, retesting these areas. You see here a little bit of a volume spike again. And what we see now is a very clear leading of aggressors on the bid side. That means we are talking about 7,000 versus 6,300 here on the ask side. That means there is no chance at this moment of time, there's no chance to buy. You can't buy anything here at the moment, even if you have, and that are my friends from volume profiling, even if you maybe have here a low volume profile or high volume profile, low volume node and high volume node. So yeah, you can't do anything but sell. So that means the market, that's what I wanted to show you this afternoon or this morning, is that the market is indicating very, very clearly what it intends to do in real time. These are, let me say that way, these are organic numbers. This is organic platform here, an organic chart, because there's nothing manipulated, given you have the right data feed, of course. Let's do it a little bit faster, because we are running out of time here. Let's do it a little bit faster. 8-fold. Now what becomes interesting is what I meant with the bid-ask imbalance. Bid-ask imbalance means they are hitting the bids so hard. There's a little bit trading on the ask side, but they are hitting the bid so hard that this imbalance is likely to come to a break. So be aware if when that happens. It's nice to, if you are short, it's very, very great to be short and to get a approval that you are right. But take into account that this can switch very, very fast. So you see the market is deteriorates, or it comes to an end here. Hard word for myself. So we have, maybe given you have been short here from 43, then the book, the delta, and maybe also this indicator is showing you very clearly it's short, it's coming down, it's coming down, it's coming down. That means you are, yes, you have been proved right. Maybe this is an stop runs here at that point here to 43, and that it goes down to this liquidity level. And now something interesting happens here. Let me go a little bit faster, a little bit more forward. Just a little bit more, so not too boring you with this recording here. And let me show you anything else here. Now that you, maybe you have closed your trade because now the ask was hit. The ask is hitting. The ask, the aggressors are hitting the ask more than the bid side. That means something is changing. You can add, oh come on. You can add, excuse me, that this, by the way, this indicator is reading all history data when you start. So when the market comes to a stop or maybe to a bottom, you have, of course, another possibilities to measure if this is really true, because this delta is showing a clear divergence. So if you like divergences, so have a look at them, because between this point you see that was the low, and this point, that means the buyings are more. You see on this time the buyers have been there and they are hitting the ask very, 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 very fast and very, very intense. That means the divergence is building here. So as I said, I'm not a friend of deltas or divergences, but that's only my personal opinion on that. So the velocity, now you see how the velocity is decreasing also here at the, look here, come on, look here in the order book. You can see how this order book imbalance grows. Let's go a little bit slower here. and you see the market is coming to an, let me say, rest, or to a pause here at this moment. But you see very clearly that now the aggressors on the ask side are in front. So they are leading the market. You have also nice divergence, divergence here. You have a nice divergence here, which happens very often during the day. And then it leads you to say maybe you have other indicator here, or other lines here, or supports here. It shows you that this market is likely to go up. That could be a nice buy here. Let's jump a little bit forward. So the velocity of the market, that means traded market volume, is decreasing here. It's simply decreasing here. And now what you see here is again bid-ask imbalance, bid-ask imbalance here on that point. And as I said, I will do it a little bit more in detail in the YouTube video about this functions. It takes simply time. It takes time for the market to make a break. Maybe you are invested, and when you see this differences here, you should be alerted to, and that means maybe closing your trade, or trail your stop, or make your stops a little bit closer, excuse me. You also see now, just to catch that, it's hard to catch that one. You see also very, very clearly that now the pressure is on the ask side. The order book imbalance in Bookmap shows you the pressure on the ask side. As well, when you look at a quotes delta, you see the pressure on the bid side. So this guys here, this traded volume here, and on this side 75 here, for example, and the numbers here indicates there is pressure to the upside. They are supporting. That means if you are in the position, you have not only liquidity, which is a separate topic to talk about that, but you have also numerical proofments that the market is going up. So you are right, maybe you took your position somewhere here, and you got all the way the confirmation that the market is in your favor, that the market proves you right. Just to show you anything else here as well, please mind that the divergence is there. So we have nearly the same prices here, but the traded volume on that side, on the second touch of the second top here, of the double top, is much lower than here at that point. Let me stop that here. And as well, when you see that, you are alerted that you have some indicators and reading, okay, something is amiss here, maybe I have to stop or exit my trade, or maybe reverse my trade. However you are trading, that's really yes, your personal style of trading. But what I wanted to show you in this very short presentation is that it's possible to understand where the market is setting. You need only the limit order book imbalance. You have to be a friend of a limit order book in your Bookmap copy. As said, it takes only a few minutes. It takes only a few seconds to set it up. And if you want, you can add this market volume imbalance pro market volume pro indicator to add a little bit more information to that what you see on the chart. Thank you for watching and stay safe.